Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the economic outlook in the West seems to be brightening. On Wall Street, equities touched their highest levels in 2 weeks, and a flurry of deal activity and strong quarterly earnings boosted investor confidence. October data signalled that American factories have started the month in a strong fashion, with output and new order volumes rising at markedly faster rates than in September. A rebound in business conditions contributed to greater input buying among manufacturing firms and renewed pressures on capacity. Input cost inflation has risen to its strongest in almost 2 years. In Europe, there are also some definite green shoots. The pace of economic growth there rose to the highest seen so far this year in October, led by a growth upturn in Germany, according to PMI survey data. Faster growth on order books and an acceleration in the pace of hiring also augur well for the region's economy to continue to strengthen in coming months. Inflationary pressures, meanwhile, showed signs of picking up, with the survey recording the largest increase in prices charged for over 5 years. The European Union's hopes of signing a landmark free trade deal with Canada appeared to evaporate overnight as the Belgian federal government failed to win the consent of local politicians in their French-speaking region. Any country in the EU can block these deals, and either region in Belgium can block the Belgian approval. It's a wonder the EU can get anything approved. New research shows that the world's highly skilled migrants are increasingly living in just 4 countries: the US, Britain, Canada and Australia. It is research that highlights the challenges of the brain drain from non-English speaking and developing countries. And although the UK is in this exclusive list, it's also one of the largest sources of talent for the other 3. In New Zealand, our tax authorities have launched a series of audits into tax arrangements of international technology firms after they found anomalies in their filed New Zealand accounts. In Australia, their banking regulator is bringing in rules that borrowers must be strong enough to repay their mortgage if interest rates rise to 7%. I wonder how many new invested borrowers in New Zealand, let alone first home buyers, could meet that standard here. On a $500,000 loan, that'll involve additional weekly payments of $179. APRA also insisting on banks being much more inquisitive on supporting statements of income and expenses, wanting more independent verification. In New York, the US Treasury 10-year yield is higher at 1.77% today. US benchmark oil prices slipped today by nearly $2 and are now just under $50 a barrel, while the Brent benchmark is now just under $51 a barrel. A refusal by Iraq to join output restraint is the catalyst for the drop. This is despite the World Bank raising its 2017 oil price forecast, which seems to have been ignored. The gold price is down $6, now at $1,262 an ounce, and the New Zealand dollar is lower too, at 71.3 US cents, and the cross rate has pulled back a small amount against the Aussie to 93.8 Aussie cents, and the euro to 65.5 euro cents. The TWR is now at 75.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.